Welcome back to Yahoo Finance Live, everyone. It is time for the Yahoo Finance Triple Play, where myself, Rochelle, and Jared today, we're going to put 3 stocks on your radar that we're tracking going into the close. We've got just about 28 minutes left in today's session, and I'll kick things off. First and foremost, got to talk about GME. We were watching this one yesterday after the close, breaking down earnings for you live on air. We even had a live reaction from Wedbush analyst Michael Pachter, and somehow shares are up right now by about 7.4%. We did say that it was going to come down to how the company positioned their own ambitions, especially for this NFT exchange that they're set to launch by the end of July is what it equates to. They said the end of their second fiscal quarter. And so with that in mind, of course, it was a mixed bag for GME when they reported earnings. They topped some of the revenue estimates, however, missed on earnings. EPS came in light, and it was actually a loss in a quarter that they should have had a profit. At least that was the expectation, especially considering it was the holiday quarter where they haven't failed to see a profit in historical context. And so with all of that in mind, investors were watching this one closely going into the trading, or closely into earnings yesterday. Thereafter, saw shares move lower precipitously. And however, here on the day where we've got the broader markets higher, GME shares, they are also healthily in the green as of right now.
And it's interesting because when you think of GameStop and you think of now them venturing into things like NFTs, at least that does make more sense than what we're seeing with AMC venturing into sort of gold and silver. So in terms of how they're able to sort of bounce back and keep investors on board, it's interesting that they're going the NFT route, especially since a lot of people are still debating on the value of NFTs. So it'll be interesting to see if that gamble pays off. Now, shifting gears now, literally, I'm going with Didi, that's my ticker, DIDI. Now, they're still hitching a ride upwards with other Chinese tech stocks again today, and that's thanks to China's top financial policymakers saying that they would make several more market-friendly measures. And as you can see, the stock is now up about 0.2%. At one point, it was up more than 62%. So we're seeing that momentum is still continuing. Now, that also comes despite the issues it was having with having dual listing on the Hong Kong exchange being halted. And you have to think of where it's coming from. It had one of the worst performing IPOs of 2021. We'll see if that momentum continues, depending on what happens with China's delisting options. That's something that's on the table still right now. We are seeing, though, some hints of cooperation that there could perhaps be a resolution on the way.
Oh, Rochelle, the storied tale of Didi. I want to direct everybody's attention to the Wi-Fi Interactive. I'm going to be brief on this. This is what's happened in Chinese stocks over the last 3 days. In the upper left, that's Didi, up 123%. Year to date, though, wow, ouch, still looking pretty bad. Although I will say at the beginning of the week, I don't think any of these guys was in the green. So let's go to the semiconductors. This is a year to date too, but I want to get it back to the intraday. And actually, let's go to a 5-day. In fact, we can see Nvidia posting gains of about 20% for the week. This is a year-to-date chart, and you can see we found some support at some prior levels here, and over the last 4 days have really launched higher. Need to take out these February highs, though. And let me put on a 2-year chart where I get some analyst commentary about an investor day that they're having next week, and this is called their GTC event. So Citi, who rates a stock a buy with a price target of $350, is saying the firm expects Nvidia will announce new 5-nanometer data center compute graphics processing units at the event and provide an update on its auto sales pipeline. By the way, 5 nanometers, incredibly small. And here's a quote: investors expect some buybacks post the failed ARM deal. That would be the tens of billions of dollars of ARM deal that just didn't go through because of regulatory constraints. So now they have a war chest, and we'll have to see what comes of that, guys.
And especially when you consider the semiconductor supply chain shortage and you consider the squeeze, a lot of people wondering what's going to happen with some of these the raw materials that go into chips coming out of Russia, Ukraine. We're going to continue probably to see a lot of those chip makers seeing prices skyrocket there as well. Thank you so much, guys. That is our triple play.